Welcome back to our channel. So this is a follow-up to a video we did 2 weeks ago where we discussed our outlook on uranium, price forecast, and why we believe near-term prices could be under pressure. If you have not watched that video, please check that out. I've left a link at the bottom. So in this video, I'll share with you a key tool we use for filtering uranium stocks. You'll find it very useful if you're thinking of investing or are invested in uranium stocks. Before we get into it, let's take a quick look at prices. So since our video 2 weeks ago, prices dropped 6% to $100 a pound and have since increased to $106 a pound. Now the sector has had two material positive developments recently. Number one, Japan has added uranium to its list of critical minerals. Japan is a major consumer with no domestic production and relies 100% on imports from Australia, Canada and Kazakhstan. And number two, the world's largest physical uranium fund run by Sprott bought another 400,000 pounds of uranium in the last month and have increased their holdings to 64 million pounds. That said, we expect downward pressure on uranium prices in the near term as we expect supply growth to exceed demand growth in the near term, and over the long term we remain bullish on uranium as uranium remains one of the cheapest and cleanest sources of energy. But when it comes to small cap stocks, since most companies do not have any revenue, we use something called EV to resource ratio, and this metrics gives us insights on whether a stock is over or undervalued. Alright, so here's how we do this. Step 1, calculate the enterprise value or EV of a stock. It's basically market cap of a stock plus debt minus cash. What this number gives you is what the market thinks the value of a company's projects is. Step 2, find that company's resource estimate. Now you can find that number in a company's deck or its website. You want to use 100% of measured and indicated resources and 50% of inferred resources. Step 3, calculate the EV to resource ratio to get a dollar per pound figure. And finally, step 4, compare the dollar per pound figure you got to the average number shown in this table. Now, if the EV to resource of the company you're looking at is less than the average, for example, if you're looking at an African junior and its EV to resource is less than $4 a pound, it's a good signal that the stock is potentially undervalued and you can spend more time researching the stock. So hope that helps. That's what I have for you today. If you like our content, please support us, subscribe, like and share this video. Thanks for watching. I'll be back with you next week with more ideas.